Welcome to Home Hive. My name is Kristen Krebs. I'm here with my amazing co-host, Jennifer Cortez. And today we have the pleasure of talking to James Carmody, Vice President of Synergy One Lending. I am especially excited to talk to him because he is my lender on the property that I own with an ADU on it. So welcome, James. Nice to see you.
Thanks for having me, and welcome to my garage.
I love it. It's your future ADU.
It could be a future ADU. It actually is perfectly set up for that. Yeah, thanks for having me, though, ladies. I really appreciate the opportunity to share. Thanks.
Yeah. So tell us a little bit about you.
A little bit about me. Gosh. All right. So many different directions where I could take that question. No, we'll keep it PG. So, I am a mortgage banker. We make home loans for people buying their first home, as well as people buying their 10th and 20th home, but primarily focus on residential mortgages, and we're based out of San Diego, California. Personally, I've been in the mortgage business for 17 years. Absolutely love it. I fell in love with it, back in 2003 when I started, fresh out of college. Since then, I've helped over 2,000 clients close on mortgages, and I don't see myself ever stopping. At the heart of it, I'm a math nerd and, a bit of a math geek. And I actually really love people, and the mortgage business is perfect match for that. So I love what I do.
That's awesome.
Well, James, thanks so much for joining us. As here on Home Hive, we are advocates for education and helping to inform our community with the correct information, what's relevant right now. You being, a mortgage broker in this industry, and as we speak specifically on ADUs, which stands for accessory dwelling units, the financing piece is a huge component of how you make that happen, whether the ADU exists on the property or not. So there's a lot of different opportunities, but we can't do it without financing. So
right. We're not all independently wealthy.
Right.
Yes. Thank goodness I have a job.
Right, exactly. So, before we get on the ADU side, just, as you've been in this industry for a significant period of time, that is important because you've weathered a lot of different seasons. We're in another one now, recording this through COVID-19. But, what are the different benefits of having been in the industry for so long, and then where we stand right now in the current season?
So are you speaking to like personal benefits, for having that kind of longevity?
Yeah, as being an industry professional, so, for a consumer, what can consumers look for, as they're beginning to speak with different industry professionals, within finance?
Yeah. Great question, right? Because there's a lot of different lenders out there and a lot of places to start. And a lot of us start on our cell phone, looking online, searching, right? I think that things you want to look for are people that have been doing it for a while, but also people that have a lot of transactions under their belt. Human beings, we all learn by doing. You can't replace experiential learning. And these ADU loans are complicated. There's a lot of moving parts. And so you want to align yourself with someone that's done a significant amount of them, that knows what they're doing. God forbid you get in a jam, knows how to work around things. You also want someone that's a great communicator. And do they communicate how you want to communicate? If you prefer text messaging, do they text? If you want to pick up the telephone or email, like what does that modality look like, and make sure that you're in alignment. And then last, and just as important as the other ones, is interest rates, right? You want someone that's super competitive, that doesn't have a ton of cost and is also very transparent with you, can teach you the why behind the line items on your estimation sheet. Why is my interest rate this? What is this charge? What's this? What's that? And explain it to you and teach you on it. Because if you don't understand it, then that lender hasn't done a great job. If you're not crystal clear on the numbers and the expectations, probably not a good match. I like to think I do a pretty good job of that myself.
You do. I can speak from personal experience. No, I actually really enjoyed working with you because being a millennial and being a first-time homeowner or home buyer, really at that time, you definitely do exactly what you're talking about. You help walk people through each step. You clarify each thing along the way. There's a checklist that you follow, which I love checklists. So it made me very excited about it. So, yeah, but there's a lot to consider, especially if you're a first-time home buyer or a millennial looking for a property, whether it be your first or like you said, 10th, 20th property, whatever it is. But, there's a lot of things to consider. There's a lot of things that I didn't know walking into this. So it was nice to be able to have somebody to kind of guide you through the process. So.
Yeah, buying a piece of real estate it's a monster checklist. There's multiple parties and companies involved. And the more you align yourself with professionals that can explain and educate and guide you on it, the less anxious you'll be, the more calm you'll be, the happier the experience overall. Because it's about getting information and being given information in a way that you can consume it. So then you can make a confident, clear decision for yourself.
Yeah. That's such a great point. It's not only the communication piece of it, but it's a lot of information. It's obviously a really significant decision. There's usually a lot of emotions tied into it. So working with an experienced professional who has done it, you're not their first transaction, really important, especially as we talk about accessory dwelling units and the great opportunity that they are, and how different laws have changed it here at the state level in California, and then how local different jurisdictions in the San Diego region have adopted that and how they're pro ADU. It's a great opportunity. But with a lot of recent changes, obviously that creates some new, different types of experiences. Another reason why it's really important to work with those professionals who have that experience within the industry, but then specifically with working and doing these types of transactions specific to ADUs. So let's talk specifically to millennials. So millennials, it could be their first home buying experience. It may not be, but specifically to the topic of millennials, why do you personally and professionally think and know that ADUs are a great opportunity for them?
Well, I think the ADU provides a lot of value and a lot of opportunity in a couple ways. First and foremost, financially, right? The ability to have additional income coming from the place that you live in, right? So right now I'm just speaking to you buy a place, you're going to live in it and rent out the ADU, or maybe you live in the ADU and you rent out the house, right? You get creative with it versus an investor who just does that strictly for income. But that accessory dwelling unit can provide you, $1,000, $1,500, $2,000. I've even seen some numbers of $2,500 in monthly rental income on the accessory dwelling unit. So financially, I think it makes sense from an income standpoint. Taxation, right? Disclaimer, I'm not a certified public accountant, but the way that you can work your tax returns with an accessory dwelling unit and the additional benefits you get from the write-offs are tremendous, and you can really extrapolate those to help you when you file your returns each year. And then third is, I think just peace of mind, knowing that you are contributing to the community, you're contributing another door, another unit for housing. When we're here in Southern California, have a tremendous housing shortage, right? Like we have more people that want to live here and we don't have enough units. So accessory dwelling units provide an answer and an example to that. And who better than you, someone who's listening or watching this, to do that? You're like, why the heck not? It's just a matter of getting informed, learning what the rules are and going for it.
Yeah. Love it.
Yeah.
So what are the financing options for millennials who either want to buy a property or want to renovate one on their existing property if they have one? Yeah. What kind of options do they have?
So there's several options, right? And we're talking financing because, we all don't have that cash. So that's where I come in. Let's first speak to the existing owner, right? So if you're watching this or you're listening to this and you already own your property and you raised your hand, you're like, I want to add an ADU. and I need a loan. I need financing to do that. So one is you can get a home equity line of credit, which simply means you're getting a second mortgage to use part of the equity that's in your home to finance that accessory dwelling unit. You leave your current mortgage, your first trust deed, in place. Maybe you have a really great fixed rate mortgage that's super low right now, and you're like, I don't want to give that up at all. Cool. Leave that alone. And then you go get a home equity line of credit and above and beyond that. And a home equity line of credit works kind of like a giant checkbook, right? You get approved for a specific amount. That amount, maybe that's $50,000, $100,000, $200,000. And as you need it and you use it, you write checks or you draw on it to pay the contractors and the service providers and for materials and different things. And then you pay interest on that amount you're borrowing as you're using it. If you don't use it all, you don't pay the money on that. So it's powerful in that regard. You might have a line of credit for $200,000, but maybe you're only using $50,000 of it at a time. So you're only paying interest on the $50,000. Super powerful. The one downside to that is you've got to have a good amount of equity to really tap into that, to access that and get approved that home equity line of credit to do the ADU. Another option is a cash out refinance, right? Maybe you have a so-so interest rate on your current mortgage. You've got a lot of equity. What you do is pay off the current mortgage and you take your loan amount up to the dollar amount you need above and beyond that. So just quick example, let's say you owe $400,000 on a mortgage and you need $200,000. Take your $400,000 mortgage up to $600,000. So now you've got one loan for $600,000. At closing, you get that $200,000 wired to you in cash. So that money's just now in your account. You can use it as you will, and you pay interest. You pay your mortgage payment on the $600,000, the total that you borrowed, right? So that's a second way to do it. Then there's a third way to do it, which is renovation financing. Now, Fannie Mae and Freddie Mac have programs. Those are the government-sponsored entities, that'll guarantee and warrant these loans. And then HUD, FHA also has one. And then for you veterans, there's a couple of super specific handful of lenders that'll do it for VA loans. Most common though is the 203K loan and then followed by the Fannie Mae Homestyle. Why people use those types of products is they have an equity challenge, meaning, all right, I owe $500, currently it's worth $550, or I bought it a year or two ago and I don't have a lot of equity, but the ADU is my ticket. I add that ADU on and that $550 value becomes $750, $800, right? It significantly increases it because that FHA 203K financing or the Homestyle, those renovation loans are going to be underwritten and closed based upon future value. The appraiser that's going out there to give their opinion of value, they're giving current value, but then they're taking into account the plans, the budget, what are other properties in that neighborhood that already have an ADU, and they're giving their opinion based upon the future value. So that loan gets made off that future value. It's fantastic. And then when you close, you request the money in the form of draws. So you'll say, hey, I'm ready to pour my concrete and I got to pay back some of the licensing fees. Okay, so you make that request and typically 7 to 10 business days, you get that money. And then as you're building, you make those requests and that money gets dispersed. So to recap, FHA 203K, Fannie Mae and Freddie Mac, the Homestyle, Home Ready, those products are great if you don't have a lot of equity. One before that I mentioned is a straight cash out refinance, meaning if your current mortgage gets paid up, you bring that loan amount up, you have one new loan, you get the whole lump sum in cash at closing. And then the first one I talked about is you have a lot of equity, you don't want to touch your first mortgage, you do a home equity line of credit. So there's 3 different ways to do it outside of cash. So a lot of flexibility there, and it's about getting educated and talking through with someone such as myself about what matters to you, what are the pros and cons of each, and what's going to be the most cost effective and the least amount of headache for you to do it.
Awesome.
Yeah, I think it's always important, as you're on the consumer side, but also that you're working with an industry professional that is asking you what your goals are. So, as as ADUs are, they're not necessarily a new opportunity, but they're a lot more feasible and tangible now because of different state and local changes. So, with that regard, is you want to be you as a consumer want to be working with industry professionals who not only understand what your goal is now, but in the future, because as you have another unit, as an ADU, or whether it's, the primary piece on the property, whether you want both of them rented out or one of them rented out, it's really important for that industry professional such as yourself to understand what the goals are. And also from a consumer standpoint, let's break it down that it could be a buyer that is right now, that is out in the market looking for a property to buy that may or may not have an ADU on the property. So that's also important because there is a difference whether you're planning to buy a property that actually has an ADU on it, or whether you're buying a property that can accommodate a future ADU to build. And or if you're an owner of a property and you can also build an ADU on that property, and whether you can use the different options that James had just that you just explained. It's really important to work with people who have done this, especially the financing piece can be quite complicated.
Yeah, there's just more layers to it than traditional financing. And let's talk about for the buyer for a second. We just covered you already own the place, you want to add an ADU, right? So we talked about those three different financing possibilities. What about, you're listening to this, you're watching this, and you're like, all right, I know the neighborhood, I definitely want an ADU, and you're checking out properties, you're active with your realtor. When you find a place, okay, how do we close escrow on that and then have the ADU happen? So in a perfect world, you're able to use the renovation financing, put very little down, which in some cases can be as little as 3.5%, other cases 5%, and use that future appraised value. So you buy the property and you finance your renovation all in one transaction. Typically, though, that takes, on the super fast side, 45 days. What's realistic is like 60 to 90 days, which is great. However, in this current market, it's very competitive. So that type of offer may not get accepted right now. So one thing that we're recommending is maybe you put down as little as possible to keep your costs down, acquire the property, right? So you've closed on the property, you own it. And now you're like, all right, I'm ready to go. I own this. I don't have anybody telling me how long it's going to take me, how fast or how slow. Don't do any of that. So what you do is then you refinance and use your renovation financing and work at your own pace. Then you can take that 60 to 90 days to do the renovation refinance and do the ADU and do that loan as you see fit. So that's another strategy. And that's probably the most common one we're seeing right now of millennials that are looking to buy and want to build the ADU post-closing.
Mm-hmm.
Yeah.
So important.
Yeah.
Mm-hmm. Yeah. Great. So speaking of millennials, is there anything that they can do to prepare for an opportunity like this? If they found a property that maybe they want to add an ADU, whether it be for income or for family, whatever the reasoning is, what can millennials do to prepare for that?
Great question. And I think all three of us on this can agree that being prepared is really important in life.
Yes.
And you want to have a team. You want to assemble a team that's really got your back. And that team, in my opinion, consists of your financing, but also your contractor, maybe your architect and draftsman, right? What are the plans? What can't I do on this thing, right? And then from the contractor, like, who are your laborers that are going to actually execute on this? And you want to know when you're looking at in your realtor, sorry, realtors, didn't mean to step over that, but you want someone to tell you quickly when you're identifying a property, what's possible and what's not. Not all lots are created equal. Not all opportunities are equal. And there's some things you can do on some properties that you cannot. Some properties might be ideal, like in my case, I'm in my garage, ideal for a garage conversion. Other properties, there is no garage, and adding a garage just isn't feasible, but a standalone ADU in the backyard somewhere might, or maybe you extend the roof and add that unit on. So I think assembling a good team, between financing, contractor, architect, and draftsman that can guide you, make all the difference in the world. And getting all your ducks in a row and getting all your information up front, right? I see it happen too often is people, they find a property, they're excited, but they haven't done all their homework. They haven't had those conversations previously with the lender, with the contractor, with the architect. So they're just making assumptions. And then sometimes someone's got to burst the bubble or be the dream killer. Unfortunately, a lot of times it's me, because who wants to talk to the money guy first? They come to me last. And then I'm like, hey, you don't really qualify for that. But the point is, assemble your team and have the conversations in advance so you know exactly what you can and can't do.
Before wrapping up, I actually, that's a really important point. Something that James had just said is we advocate for the consumer speaking with financing as soon as they can. It really should be in the beginning, because if you're going to go through this process, if you're going to work with those other professionals, part of this entire network that's going to make this happen for you, and then you find out somewhere through, heaven forbid that, towards the end that you don't qualify, that you can't do it.
Right.
I mean, then unfortunately, you've most likely wasted money, and you've certainly wasted a lot of your time. Mm. So speaking with someone in financing, speaking with James as soon as you can. And the thing is that if for whatever reason, if you learn that it's, if you find a property, or if it's your own property, and if maybe for whatever reason, if it's a not right now, that does not mean it's a no forever.
Exactly.
So again, James is not only to necessarily tell you yes or tell you no. He and his team can help to specifically outline either now how you can do it, or how you can prepare to get it done in the future.
Right. Let's make a plan, right? Kristen brought up checklist. I love checklists too. It's like, maybe you need to do something on credit. Maybe you need to pay off some debt. Maybe you need a little bit more income that you need to claim. I call it getting pre-approved for your ADU, right? Like making sure that you can execute on the financing in advance. And if right now you can't and you got some work to do, cool. You work with your team and you build out that plan. So then you're fully prepared and ready to go, and you can execute when that right opportunity comes along.
Right.
Yeah. Makes a lot of sense.
Yeah.
All right. Well, where can people find out more about you?
We're pretty easy to find. You can find us online at thecarmodyteam.com. That's the Carmody team, all spelled out, TheCarmodyTeam.com. Or you can find me on Instagram or any social media. Instagram handle is James S. Carmody, JamessScarmody. But I'm accessible. You have any questions, I'm readily available.
Awesome. We'll also include his contact information as the episode is released and posted as well. So James, thanks so much for sharing with our audience why it's important to work with an industry professional such as yourself. Why that experience? I mean, you're going on 17 years in the business. Really, really important, especially as we're all navigating through an interesting season. You need to be working with professionals that understand not only what your goals are now, what your goals are in the future, and really understand what the different financing opportunities are for you and, hopefully your future ADU. So again, thanks so much for joining us. Thanks for sharing your wisdom and experience with us. And we encourage our audience to reach out to you. So thanks for listening to another episode of Home Hive. Please tune in for future episodes.
Ladies, great job. I love that you are doing this, because this is so impactful and so valuable. If you're listening to this, share it with a friend.
Definitely.
Awesome. Okay, it's like my cut thing.
All right, is that what you wanted? Did I deliver?
That was great.
Okay, good.
It's perfect how you broke it down, James, both on the whether it's for an owner.
Buy or buy.
Yeah. I like that it was really slow, and we walked him through each and every step. I felt like you hit every point that would need to be hit. So I think that was great.
Good. Yeah, thanks. I mean,
how are you? How's the family?
Podcast and different stuff, and it's like if people are too fast or they assume that the listener understands,
right?
you're probably going to talk over people's heads.
Yeah. And especially if we're trying to target millennials for this particular episode, I think it's really helpful because most likely they're going to be first-time home buyers. So it's really nice and helpful to be able to walk them through each step like that. So
I'm like, thank God half of my clients are first-time home buyers, and all I do is teach people all day. Now it's on Zoom.
Right, there you go. Awesome. How's your sorry to go off topic, but how's the family?
They're good. They're good. They're actually at the beach right now.
Oh, nice.
Yeah, I know. Mary takes them to the beach of the bay most mornings.
Oh, how fun.
Yeah, she's got a couple of the moms that she meets, that have young kids too. So that's fun. It's interesting. This, like, I struggled. I was like a fish out of water, like the first month of this. Now I love it. Like, I get to spend the first hour and a half of my day every day is me and Connor just hanging out. We might be digging dirt or playing with trucks or screwing around. And then lunchtime, we all eat lunch together, and then we all have dinner together. Oh. None of that was happening before. Like, it was like dinner like 3 or 4 nights a week, maybe. Certainly not breakfast and lunch. It's kind of been a blessing in that regard,
Yeah.
But he's great. The little one is fat and happy. Like, that kid's got like 3 or 4 chins.
Oh, that's awesome.
Been good though.
It's really interesting that, you adapt. Like, we all adapt, like we're all adapting through this, whether we want the change or not. It's funny because I've been saying it for a couple months now. And, as we're saying it, we're thinking like, oh, there's like closer to the end of the tunnel, closer to the end of the tunnel. The end of the tunnel is not this week.
Right.
But yeah, so I mean, it's interesting just talking from like a media and story perspective, is that we've got the story for right now, how we've been able to adapt and change through it, and hopefully not just survive, but really like thrive through it. How are we learning and growing through it, and just being and getting better. But then we've got a story that we can't even necessarily fully grasp because not enough time has gone by. And just in seeing what we've seen here in the state of California with lockdowns again is, it's going to be really interesting, like James, just from like a rise up perspective. And as you talk about just like stories and things that you've overcome and like what you've overcome to get to where you are now, it's super powerful because we don't even know where we're going to be.
No,
I mean specifically because of COVID.
Well, you have these ideals, and, I'll be the first to admit, like, part of my identity as a loan officer was like, I need to be in a suit and tie. I need to be in a nice office, and that's where I meet my clients. Well, bullshit. Like, I'm in my garage. We're doing more loans than we've ever done. And I haven't had, like, I probably do 2 or 3 Zooms a day with buyers. I haven't once had someone be like, oh, I can't do business with you. You're in your garage.
Right.
So I'm totally debunking that. And now I'm like, I was talking, to Majerus last month, my boss, and I'm like, when we open this back up, I'm not going to be there Monday through Friday. That's not going to happen, And so I'm mentally like, what do I want my life to look like? What's my work lifestyle going to be? Certainly not, 8 to 6 in the office Monday through Friday.
Yeah.
We're realizing that, and that's, I think a lot of industry, like pretty much everybody's at home,
Mm-hmm. Yeah. Yeah, it's great.
on the real estate side, like in millennials, like, so I've got a handful of millennials right now that are buying in other markets from where they currently live. Mm-hmm. And like, I talked to this couple yesterday, and the boyfriend's from San Diego and the gal grew up in the Bay Area, and they moved up to San Francisco a couple of years ago for her work. Well, now everyone's working from home. They're paying like $5,000 a month to live in like the studio in downtown San Fran. And they're like, we haven't bought before. We're first time buyers. So we're looking in Bay Area. We're looking in Oakland. We're looking LA, and then we're looking San Diego. I'm like, fantastic. You guys can kind of do whatever you want because you can live wherever you want and work wherever you want.
Yeah. Yeah.
It's just what's possible for real estate. Now people can work wherever.
Oh yeah. It's amazing. And I think also like, as we talk about, ADUs or investment properties, I mean, I've seen, well, that's a different topic, but I've seen a lot of people, at least 20 well, I guess couple, you can include the couples, but the kids aren't included within that, move out of California over the last month and a half. And I mean, that's for a variety of different reasons, but I mean, the tax and like just personally, the tax incentive for getting out of state is, obviously is appealing. But then I've also seen people stay in California, but invest in other markets. So that's been actually interesting too. And then if they know about the ADU piece of it, they're investing out of San Diego. Obviously they're investing for longer term cash flow. But if you understand how to leverage an ADU on top of that, then they're not usually looking at a 1 unit type of scenario, which is so really, so that's been fun. I think it's just like the adaptability of how you invest and in what that looks like. So it's an interesting season.
Yeah, it'll be interesting to see how all businesses evolve and change through this whole process, and who stays, because there's a lot of places that are closing too.
The commercial space is going to be very difficult and very challenging 24 months from now.
Yeah.
Part of me sees I think there's going to be part of these commercial buildings that become like studio apartments. Take like our building, for example, right? Like 3131 Community Over North.
Mm-hmm.
Okay. How many businesses need all that square footage? And now Irvine Company has how many examples of buildings like that? Do they convert them into apartments? And there's a WeWork like lobby kind of thing.
Yeah.
Yeah. Surprised if we see some of those changes.
Yeah.
Is there any type of talk about your office?
Oh yeah, we've already limited the amount of space. Like we didn't renew all of our space leases. We got lucky; they were up in April.
Oh wow!
Oh, nice.
Yeah.
Are you still keeping all the space that you currently have?
Keeping the whole ground floor.
Okay.
At first, we were talking like we should just take half, and then we realized we need all of it, but we don't need all of 11. We definitely have cut back on space.
Wow.
Yeah. I'm excited. I think it'll be really cool to see how these different properties evolve and how, I think a lot of people are going to work from home. So it'll be more like live workspaces rather than, I don't know. I think it's a better use of real estate personally. But
hey, this is not only my office. This is my garage. This is my storage unit, my play area with my toddler, and my gym.
Right, there you go. And think if you have to pay for each one of those, look at how much money you're saving.
Well, friend, it was so good to see you.
You both look great. Glad that you're both thriving.
Yeah. Awesome. Well, I can't wait to actually see you again in person.
I know. When this thing comes down, we can all get together for a glass of wine or coffee or something.
Right? Yep. Sounds good.
Good to see you both.
You too.
Jennifer, tell Kevin I said hi.
I will.
Good job.
Okay. See ya.
Bye.
Thank you, James. Bye.